Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Tuesday, the 2nd of December. I'm Caroline Hepke in London.
And I'm Stephen Carroll in Brussels. Coming up today, crypto's deepening downturn wipes out almost $1 billion in leveraged bets as retail investors get stung.
The EU warns the US against forcing a lopsided peace plan on Ukraine as Steve Witkoff heads to Moscow.
Plus, the verdict is in. Litigation finance hits a wall as bets on huge gains falter. We have a special report.
Let's start with a roundup of our top stories.
Almost $1 billion of leveraged crypto positions were liquidated during another sharp drop in prices yesterday. Bitcoin slid by as much as 8%, bringing its decline since early October to almost 30% before recovering in early trading today. The volatile moves have hit retail traders particularly hard as dip buyers have failed to materialise. Jalak Jobamputra, managing partner at Future Perfect Ventures, says the market is tracking a broader risk-off mood.
The October sell-off in the crypto sector was due to the tariff uncertainty around China. We also saw people taking profits when Bitcoin went up to 126,000. So in the span of 3 months or less than 3 months, we've seen over a 30% drop. That being said, I don't see a downward spiral because there are going to be people who want to get access to the asset.
Jalak Jobamputra speaking there as traders are now watching $80,000 as the next key support level for Bitcoin. Today, Bitcoin is trading up 0.6%, just shy of $87,000.
US envoy Steve Witkoff is travelling to Moscow today for talks over Russia's war in Ukraine. This as the EU's top diplomat has expressed concern that American attempts to push Ukraine into a lopsided peace plan would only encourage Russia's aggression. Europe is on edge after an initial 28-point plan proposed by the US suggested numerous Russia-friendly concessions from Kyiv. Ukrainian President Volodymyr Zelensky said updated language in the latest draft deal looks better, but territory remains the most difficult topic. Speaking after a meeting of EU defence ministers in Brussels, Keir Starmer said putting pressure on the weaker side is not in anyone's interests.
Not in the interest of Ukraine, not in the interest of European Union, also not in the interest of the global overall security, because it's the United Nations Charter that says that you can't change borders by force. If this pays off, we will see this elsewhere. All around the world, then we see that whoever has the power gets to take what they want, which is not good for the majority of the countries in the world.
The EU representative for Foreign Affairs, Keir Starmer, there. She went on to say that the outcome of today's US-Russia talks will be, quote, pivotal.
European defence firms are scrambling for a vital component in high-tech weapons, rare earth minerals. But nimble US rivals are scooping them up more quickly. Some estimates suggest European supplies could run dry in the coming months. Bloomberg's Freddie Fulston has more.
Sources told Bloomberg that US firms are much better at securing rare earths than their European counterparts. They have a sense of urgency and financial might, and they're more creative in how they navigate Beijing's restrictions on supplies. The EU is planning to commit at least $3.5 billion over the next year to help sever its dependence on China's raw materials. The funding would be critical to securing the military equipment Europe so urgently needs. In London, Freddie Fulston, Bloomberg Radio.
Taiwan's foreign minister says the dispute between China and Japan could drag on for a year. That's after Japanese Prime Minister Sanae Takaichi commented on the possible involvement of her country's troops if China were to invade Taiwan. Beijing saw those comments as crossing a red line. Speaking to Bloomberg, Taiwan's Lin Chia-lung said his country hopes the two sides can resolve their differences.
Japan has already shown its willingness because it's in the parliament, the QA session. Yeah. So there are some backgrounds for Beijing side. Maybe take maybe a year to stabilize the situation.
Taiwan's Foreign Minister Lin Chia-lung speaking there. Meanwhile, Taiwanese President Lai Ching-te has urged Beijing to act like a responsible major power. The Foreign Ministry in Beijing didn't immediately respond to a request for comment.
The UK is set to adopt a more pro-business approach to China. In his annual foreign policy speech, the Prime Minister Keir Starmer said the country's dealings with China will have more consequences for the public than any other global shift. He added that increased collaboration would not come at the cost of safety.
Our response will not be driven by fear, nor softened by illusion. It will be grounded in strength, clarity and sober realism, in line with our wider international approach and guided by our conviction that strong, purposeful engagement on the world stage is the best way, the only way in these times, to deliver growth and security for the British people.
Prime Minister Keir Starmer seeking to draw a line under a turbulent period for UK-China relations. His remarks come ahead of a decision about a controversial new Chinese embassy in London and a potential visit to the country next year. According to Starmer, professional and financial services, as well as creative and pharmaceutical industries, will be key beneficiaries of Chinese opportunities, adding the UK Investment Minister is currently visiting the country.
The chairman of the Office for Budget Responsibility has resigned following the premature publication of analysis of the latest UK budget. Richard Hughes took responsibility for the error after an investigation found the report was leaked due to people entering a predictable internet address. Former director of the Institute for Fiscal Studies, Paul Johnson, says Hughes will be missed.
It is a shame. He was a public servant of real integrity and one who had the courage as well to stand up to both this government and the last one when they've were less than clear about their communication, shall we say.
Paul Johnson speaking there. The document's early release marked an unprecedented breach of procedure. Chancellor Rachel Reeves called the mistake deeply disappointing. In a resignation letter published on Monday, Hughes said that he was certain the OBR, the UK's fiscal watchdog, could regain trust quickly despite the failure.
And those are your top stories. On the markets, the MSCI Asia Pacific Index 0.2 higher this morning. The Nikkei in Tokyo is flat. The Japanese yen 0.2 weaker against the US dollar at 155.71 after a keenly watched auction of government bonds there drew firm demand. European stock futures a 0.1 higher for Euro Stoxx 50. Wall Street futures down by 0.1% this morning.
In a moment, we'll bring you more on how that rout in crypto markets is stinging retail investors, plus why litigation finance is having a bad year. But another story has caught our eye today. I'm told it's the season of indulgence, Stephen.
Oh, is that why?
Yes. Well, perhaps you'd like to indulge in some edible or quaffable vices. Bloomberg's Kat Odell has this lovely list of the ultimate foodie gifts. Maybe I will wrap up that espresso machine. The Breville apparently consistently delivering great coffee gear, and they have a new dual boiler espresso machine that comes recommended. $3,000 though. Maybe next year, Stephen, for you.
Or perhaps you'd like a fancy toaster. I mean, you know, that's the thing that you just think it's gone too far now. We all need to calm down. So there's a new steam toaster from Belmuda, a Japanese brand. It offers, quote, a salamander mode that works like a grill.
What is that?
It's nearly $400 and it's called Toaster Pro. And I feel like for that, they probably could have come up with a slightly more imaginative name. I quite like the bakery scent candle, though. That's one I think could appeal as well. And apparently there's a big deal this year about designer bottles for drinks as well. There's a fancy Dom Perignon bottle by the Japanese artist Takashi Murakami, and also, you know, elaborate tequila bottles. It's not just what's inside that counts. Apparently now the drink needs to look good as well.
I love it. We're going to put a link to one of our fantastic ultimate foodie gift guides in our show notes for you.
Well, let's turn back to our top story this morning, that plunge in crypto assets that we've been monitoring over the past number of days. The sell-off appears to be taking a breather today, but traders are expecting more downward pressure. Our Markets Live executive editor, Mark Cudmore, joins us now for more. Mark, we're used to seeing wild swings in crypto prices, but is this different this time, given the involvement of ETFs and these levered bets we've been talking about?
I don't think it really is different. At its core, Bitcoin is constructed to have a boom and bust cycle. It's had repeated 70% plus corrections, and it's constructed to constantly have more. It can't, by construction, be stable at high prices. That's because, people have been convinced kind of in a kind of cult-like manner to buy and hold rather than to persist, tenuously that it has any functional purpose. It doesn't yield anything. So when it becomes stable at high prices, well, then there's incentive for the whales and the people who own a lot to kind of cash out at the margin. Remember, it needs always a marginal buyer to go up in value because it doesn't yield anything, doesn't produce any earnings. So as soon as you get some stability, that just engenders the next round of volatility and the next collapse. And then it falls low enough that people want to speculate again, and it goes back into the next boom cycle. The only difference is this time is that because we've got more instruments attached to it, it affects more people. But it's like, does it make a big difference if if people are losing money on one roulette machine in one casino or in 5 casinos? It's still it's just a multiplication effect.
Okay, your view, interesting and clear maybe, that about the difficulties of Bitcoin and what it is to invest in it. And I suppose, as you say, the cautionary tales may be piling up, right? Michael Saylor's Strategy Inc., which is one of those vehicles that help retail investors get into Bitcoin. Does that look like a cautionary tale now? Yeah,
I think, at least one thing you can say around Michael Saylor is that, he was original in this and kind of led the way. And I think strategy has a special status because of that. But the digital asset treasury companies don't make as much sense when it's, much easier for investors to get into crypto exposure in many different ways, like the ETFs you mentioned. Digital asset treasury companies kind of seem pointless. Remember, you're accumulating an asset that yields nothing. You're basically just accumulating loads of lines in a spreadsheet. And so it doesn't really make much sense to have a premium for that. So at least strategy was the original, was the kind of the first to kind of lead the way. It's got some status. It's the same way that Bitcoin has a special status in the crypto community. But I think, that is a worrying story. Now, I think it's very important they came out with the statement yesterday. They've got a reserve fund to pay their dividends for the next, I can't remember, it was a year and a half or something like that. 14 months is not. But ultimately, they're probably going to have to sell crypto down at some point. I think it's going to really worry people when their stock price falls, below their holdings of Bitcoin, because that stops them being able to raise more cash. And so I think ultimately it's a very flawed model, even if strategy was the original and best of them.
Mark, talk us through the sort of bigger impact or the bigger picture of what we're watching in crypto as well. Is this a useful proxy for how investors are feeling?
I think it's an exceptionally good lead indicator of retail sentiment, which is obviously a very large part of the community. I don't think it's a good guide for institutional sentiment or professional sentiment, but I think it's the highest beta, most reactive bit of retail. And I think one dynamic, and there's several dynamics to the recent decline, but one dynamic is that because this K-shaped economy in the US, well, and also globally, we are seeing people get a little bit more squeezed on cost of living and unemployment, which is putting pressure to exacerbate things. Now, I don't want to put too much weight in that dynamic. That's just feeding to the side. But I do think that's why when we see crypto get hurt, we see the other favoured retail names get hurt. The kind of the momentum stocks, the meme stocks, some of the biggest mega cap tech names, even though they're solid companies. So the direct transmission is kind of very minimal, but the guide on retail sentiment is very important. So favoured names and positions get hurt.
Yeah, it's going to be very interesting to see whether the enthusiasts hold on through another kind of Bitcoin route. Bitcoin at the moment trading just below $87,000. Mark, thank you so much for being with us. As ever, our Markets Live executive editor, Mark Cudmore, shedding a light onto the Bitcoin sell-off. Stay with us. More from Bloomberg Daybreak Europe coming up after this.
Now, litigation finance is having a bad year. After predicting huge growth as recently as January of last year, the industry, which channels money from investors to lawyers chasing corporate malfeasance, is now finding that hedge funds and other sources of capital are pulling back. Our managing editor for sustainable finance, Tasneem Brogger, joins us now for more. Tasneem, good morning. Let's start with a bit of background on this first. How much has this industry been growing in recent years?
Yeah, good morning. So after the past half decade or so, the litigation finance industry has roughly doubled in size to about $20 billion this year. So it's still niche, but it's definitely seen rapid growth. Now, behind that growth, you've got a number of factors. One is simply that we've become more litigious in general, with some sectors just developing faster than the regulations intended to rein them in. So resorting to the courts, resorting to lawsuits has just become more normalized. And such cases are often just deeply complex and just increasingly difficult to predict in terms of how long they might run. So for law firms pursuing litigation, it's become just increasingly attractive as an option to have the suits that they're litigating backed by third-party investors rather than having that risk sitting on their own balance sheets. And those are pension funds or wealth funds or hedge funds who then take on those risks against the promise of a really sizable chunk of any winnings.
What do you think has changed in investors' attitudes and why?
To a large extent, what's changed is the regulatory and legal environment in which litigation finance exists. So in the story, we list the main ones. That's namely a UK Civil Justice Council recommendation from June of this year that litigation funders need to be subject to requirements that touch on everything from capital adequacy to greater transparency on the sources of capital that they're getting from outside investors. And that then follows on from a 2023 UK Supreme Court ruling that really made a difference to the potential for financial returns for the industry in that profits could no longer be calculated as a percentage of damages, but instead would need to be calculated as a multiple of costs, essentially, which sort of created an anchor that kept the base down. In the US, the industry is now worried that lawmakers are considering reviving legislation that would introduce a significant tax on profits. And then finally, in the EU, a landmark piece of regulation that lawyers had looked to as recently as 2024 as an avenue toward more litigation. It's called the Corporate Sustainability Due Diligence Directive. That's just been dramatically scaled back as part of Europe's efforts to simplify its entire regulatory framework and enhance competitiveness.
So what's the consequence then of this funding drying up?
Cases just generally have been dragging on a lot longer than many funders had expected. And then even when plaintiffs ostensibly win, actually getting the money paid out is in some cases proving very difficult. So, for example, there's Burford Capital, which is the world's largest litigation funder. They won a legal fight back in 2023 relating to the fallout of the privatization of Argentine oil company YPF, resulting in a settlement of $16 billion. But since then, they've just faced no end of delays and hurdles in actually getting that money paid out. So, capital allocators are looking at examples like this and deciding in many cases that the risks are just too high. And so what we're seeing is that in some cases, rather than allocating funds that litigation funders can preside over with very few strings attached, they're being extremely specific and saying only this specific case is what they're going to back. And then also, in some cases, we've even seen litigation funders retreating from the business entirely and moving more into sort of advisory functions because the terms are simply too punishing.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.